120 on a German 10-year this morning. For all this talk of peak inflation, peak yields here stateside, on the other side of the Atlantic, can you make that call yet?
Yeah, I don't think we're quite there, just because Europe has been lagging the U.S. in terms of this cycle. But I don't think they're far behind either. We're starting to see that catch up. We're starting to see the market build in the expectation for a tighter policy in Europe. So I think they're lagging us, but I don't think they're quite there yet.
Kathy, the yields that we see are a complete mystery out to third quarter. What does your top end look like? How far up do you frame yields could go to?
So when we're looking at the short end, we're still looking at the Fed tightening 50 basis points the next two meetings, and probably then switching to about quarter point increases in the fall. And we see them topping out, probably in that 2 3/4 area. We're a little bit under sort of the consensus and what's built into the market. When we look out to the 10-year, our expectation is the upper end is that 3 to 3 1/4 area. As you get into a tightening cycle, yields converge across the curve. We're already seeing a little bit of inversion from 5s to 10s. So we think 3 to 3 1/4 is the upper end of what we're going to see.
Kathy, we're talking this morning about the two-sided argument within each of these houses at banks and beyond of whether we're too gloomy or whether we're too optimistic. And the data is coming out strong. Does this mean that the Fed has to go much harder? That basically, yes, you could take that 3 and 3 1/4% 10-year yield, but the path to get there is one paved by a Fed that essentially has to end this cycle, has to create a downturn?
Yeah, it certainly is the way that, they're talking right now, and have to take them seriously. It's pretty much across the board from Daly to Bullard. You're hearing the need for tighter policy. And I think that this cycle reminds me of the early 80s. Tom might remember this. But, you had high inflation, relatively healthy economy, and the idea was just to, really get that inflation down. And Volcker at the time came in and just jacked up rates until we tipped into a recession. We had 2 back-to-back very sharp recessions. So that's kind of the risk, I think, if the Fed goes really hard here. But that certainly sounds like the intention that they have.
Kathy, how achievable are these forecasts over at the Federal Reserve? Unemployment at 3.5% this year, 3.5% next year, 3.6% the year after that. How achievable is that?
I'd say that's aspirational. It would be surprising to me if you could have the kind of monetary policy we're getting with higher rates and QT, along with a global tightening cycle, and still keep unemployment near 3.5%.
Do you think they should rename the summary of economic projections Federal Reserve aspirations?
I think so. They're never going to forecast failure, right? So
true.
They have to forecast, what they hope happens.